Hey, everybody, I'm Dan Hodgman with Topstep, and today I'm sitting down with funded trader Greg. Greg, you've been in the program a while. You and I have talked quite a few times. You work closely with John. How are things going for you?
Pretty good. It's always good to see progress when you look back from with me where I started with the program to look where I am today. It's night and day of who the trader I am today, but also the person. So it's been a journey.
That's awesome to hear. John. Greg, how long have you been trading for?
So I got my feet wet in trading, not investing, trading, the summer of July 2019.
Okay.
Started trading stocks, Tesla, QQQ, random stuff, didn't know what I was doing. Stumbled upon futures in Topstep in September 2019. Been trading in the combine since you could say 2019 October. So a little over 2 years with attempting to be a professional futures trader.
That's awesome. And when you got started, so right now you're an S&P trader, but when you got started, what were some of the products you were looking at, or has it always been S&P?
Well, it's been ES, NASDAQ, crude oil, taste of gold, taste of treasury notes, 10 years. I took a look at corn on the first day of seeing futures, and I couldn't figure out the ticks, so I dropped corn, and it's been ES for me the whole way.
That's awesome. Why ES? After trying all the other products out there, what was it that brought you to the ES?
It's easy for me to understand. It's the S&P 500. It's the market. Plain and simple. It's the most liquid. It's the most traded equity index. I love the NASDAQ. I was having a lot of fun catching those waves, those whippy waves. But I settled on the S&P just because it's more, I don't know what the word I'm looking for. It's more liquid. It moves more to my liking in a predictable manner. I can see a reference and have a good sense of what the odds are for what that reference means. If we bounce off of half back, I know it's going to come back through versus another market. The thinner market, it might have higher odds of holding on a mechanical reference. With the S&P, it's so liquid. If the mechanical traders are propping up the market, they're going to get stopped out at some point. So that's one reason, or a couple of reasons why ES.
Yeah, I'm right there with you. I think I've used the analogy markets are elastic, right? When you look at levels, let's use S&P and let's use NASDAQ, two of the ones you're talking about here. S&Ps, it'll hit those levels and it's not going to rip through that level like the NASDAQ can. NASDAQ can blow through a level, but that level is still a great level just because it's looking for that catch. It's waiting for that spring to, okay, we hit our limit. Now let's rip right back through. Where S&Ps, that spring or that rubber band's just a little bit tighter. It's going to try and hold that level a little bit. It's a little bit more defined when it comes to those levels. And if you're looking at levels pretty regularly, S&Ps are a market that I think personally, and it seems like you're on the same page as me, that tends to be a little bit more tradable.
For sure. Definitely easier to read, maybe more forgiving. Like you said, the NASDAQ could rip through your level and come back 20 points. It's not my risk appetite. S&P, if we're 20 points through a level, if you're like that's a big,
market state has
information.
Completely changed.
Yeah, exactly. So, S&P would look, this morning we looked below the previous day's low by 4 points, 16 ticks, 20 ticks. We came back in. That helped me get along because I was short and we were looking below it and we weren't coming through. So I got out of the short and got long and it offered a trade. So it's for me, it's easier to read and easier to manage risk around because it's not as whippy. It's thicker. It respects the levels the way I like them sometimes.
That's good. That's good. All right, Greg, you've been working with John now for a while. Let's start from the beginning. How has that gone and how has he changed some of your trading?
He's shown me the way. Before I would have called myself a trend follower, like, oh, this indicator, that indicator. looking at tick charts, looking at 5-minute charts, 15. I didn't know he helped me build a structured process with approaching a market, any market. He helped me learn how to put a trade on. Remember the lesson number one: cheap trades. We're going to find a place where we're wrong, and we're going to trade close to that spot. And if it's wrong, so what? It's just a trade. And if we're right, it's going to be asymmetric in nature, and then it'll pay us 2-to-1, 3-to-1, 4-to-1 plus what we risk. So he's really shown me how to be a pro, and also to be, a good man, a good person. He's a very Zen-esque individual, but he helps me find perspective on those tough days. That's one of his biggest values to me with our relationship is the way he helps me find perspective, come back the next day and forget about the last day because it's gone. It's here today.
He's such an empathetic guy. He's been there, from the good, the bad. He's been at this for a very long time. John is a spectacular guy in so many facets when it's trading and just kind of being that friend when you need a friend.
Oh, for sure. For sure. To be in this industry as a trader for a long time, you have to be able to survive those tough moments, to be able to bounce back. I know he uses humor a lot to get him through those moments, and he'll crack a joke, and it'll make it easier to go through. And that's something I'm trying to emulate with my trading in my life, really, because when things are going wrong, laugh it off. It'll make it easier to get through, because you have to get through it. It's part of the game. So that's one of the lessons I've learned is, humor is a powerful tool for a trader to get through some tough situations.
Yeah, I like that you use the word tool there, right? Everyone comes into trading, we think tools, we think indicators, we think charting, we think, all these little extras that we're going to look at. There's a lot more to it. Everyone says, trading is 10% execution, 90% mental. We focus a lot on that 10% of the execution. You've got to have those other tools in the bags, that humor, those ways to get through the drawdowns, the ways to kind of keep the smile on your face, to continue to push forward. I'm really glad that you kind of use that term tool there. I think that's really important for people to recognize.
Yeah, just to share with you where I spend most of my research, my studies on, it's not on where to buy and sell. It's not on what's the market going to do. It's not on indicators. It's on how can I get through whatever the market's going to do? How can I get through adversity? And like you said, tools. It's good to think of trading as a profession like any other profession. Like if you're a carpenter, you don't have one tool for everything. You have a toolbox. And as a trader, it's really ambiguous and it's uncertain and there's risk. We get paid for taking risk. So it's learning how to do that and not blow up lightly, to put it bluntly, to get through that, because you're going to have losses. And how are you going to survive those losses, not financially, but mentally too,
That's a great way to put it. So we talk about the emotional side. Let's talk about the actual execution side. What are some of the things that you're looking at? I know you've said how you've changed from where you were to where you're at now within your charting and within indicators you're using. What are you looking at now for execution?
Yeah, so I think with execution, it should be really simple. So I always come in prepared. I do homework the night before, look at the monthly bar, weekly bar, daily bar. What's the market doing? Is it trending? Is it balancing? Is it doing a good job? Is there change on the longer time frame? And then I look at market profile. So I love the market profile. That's one thing John has shown me that I seized right away, because it's powerful. It's such a powerful tool. It condenses the day into structure, into you can see, where did we spend a lot of time? Where did we not spend a lot of time? And so making a plan and then seeing where we open up, adjusting the plan based on overnight inventory, are the weak hands from overnight long or short? Is there any inventory? And then where we're going to open, and then make, 3 plans. If the market does this, do that, for range bound, low confidence days, balancing days, or direction up or low, or higher or lower. So when it actually comes to structuring trades, one of my big edges in the market is identifying important structural references. How important is 45.50? Is it the previous day's high? Is it the last week's high? Are there single prints on the profile that add confluence to the level? So, basically when I'm executing, I'm looking for, let's say just this morning on a long, we look below the previous day's low and we come back in. I want to be a buyer because we're too short if the hypothesis is correct. So my risk appetite is really, 10 to 12 ticks on ES, 2.5 to 3 points. That's all I need. With my pro account, I've been tightening it down a little bit, and that's been hurting me because it's too tight. So 2.5 points, 3 points of risk off a level. So we come back in the previous day's range. I'm putting my stop just below the previous day's low at 45.60 and getting along at 45.63. There's a trade. And then if I'm right, it should rally right away and squeeze those shorts and then cover at the open 45.69. So a nice 2-to-1. That's basically
awesome.
how I do it.
That's awesome. All right. You said you do a lot of prep at the night before. How much does the overnight trade influence you by the time you sit down? Do you have to go in and do any readjustments, or are you the kind of guy that says, you know what, I'm not using overnight stuff. I'm strictly looking at pit hours. That's it.
Oh no, I'm always looking at overnight. When there's inventory imbalances, I lick my chops. And the overnight inventory sets there's usually inventory imbalances off the open. So if I know that overnight inventory is long, it could help me look for a short off the open, using the opening range as a short. It played out beautifully today. I didn't take the trade for other reasons, but I'm looking at overnight inventory. I'm looking at overnight highs and lows. I'm looking at what I think the market is looking at. So if I think overnight highs or lows, even if they're from the previous day, if they're visual and sticking out to me, I'm going to use them. Not necessarily to trade off them, but to find perspective. Because it's always important to maintain perspective with where the market is.
Absolutely. I know a lot of traders that day traders, they try and not look at the overnight. I think overnight's a huge benefit. There's a lot of opportunity to be found in there. I think it is huge to keep an eye on that overnight trade. But I like that you're doing the homework at night, coming in, taking a look at what happened in the overnight, reassessing, readjusting, and trading based off the information you have, not the expectation of, hey, this is what I think could happen. Rather, this is what I have. This is the information I know. Here are the areas I can look for opportunity. And hey, I've got some quality setups I can continue to focus on. I think that's huge.
Yeah, preparation keeps you out of trouble. It's trusting the preparation, because that's the hard part, executing what you write down to do. And it's really just experience. If you have experience with your preparation, you can start to trust it, because I'm human. I'm a trader. Like, we all go through the same things. It took me a long time to start trusting the preparation instead of, not taking it or throwing it out the window as soon as the market opens. But that's one thing I've been focusing on, to be grounded in the process. The plan is the guidepost. It's the guardrails. It's the coach in the game. Plan says, do this, do that. It kept me out of the early chop this morning, or it wasn't really chop. It was liquidation. But it kept me out of the middle. It kept me on the extremes, and that's where you want to play as a trader. You want to play the extremes.
I couldn't agree more. I think I actually got to ask the question today from a trader that you've kind of essentially answered. And it was, hey, I have a successful strategy that's going to present 3 to 5 trades a day, but I get caught executing more than I'm supposed to. And it's all about trusting the process. I'm a big fan of basically saying process over profits, right? Focus on the process. The profits will then eventually come. If you can focus on that process, have the trust in it. You've spent 2 years focusing on building a successful process. If you can continue to focus on that, that's what's going to lead you to success in this industry. That's what it's all about.
Oh yeah. Yep. And it's really just learning to trust yourself. And that's a hard part. Like, even if you take the trade, then you have to hold the trade and manage it and sit through the rotations. Like it's so challenging. And I think, I don't know. I mean, it's one thing that trading brings out of you is you have to learn how to trust yourself. But like you said, the process will take care of you. And honestly, I feel great when I trade my plan the way it's written up and then it works. Sure, you have a positive day, but the feeling, it's like a creative fulfillment in a way where it's like, I got it. I got the answer right today. It feels good. And that's kind of the feeling that I use to keep me around in the drawdowns, the losing days, because I know the next day could be drawn up and executed and get that feeling again of fulfillment, which is better than the profit. It's that feeling of like creative success. It's fulfilling, to get the questions right.
I love that. I think, you can take away that fulfillment too, even on the down days when you're executing based off the plan, right?
Yeah.
If you stick to the plan, you can still walk away fulfilled even on a down day and knowing, hey, I learned, today, huge earnings, right? We've got crazy earnings coming out. And hey, I learned today that if I'm trading on the big boy day of earnings, my strategy is probably not the best. Hey, I'm learning something here. I executed as I'm supposed to. I walked away when I was supposed to. I now know going forward every quarter when these big guys are releasing their earnings, maybe that's a day I stay away, right? We start to learn these things and you continue to build over them. And we all have those, trading FOMC. Maybe that's a day you learned that it doesn't really work with my strategy. You can have those takeaways, and then you look at it and you can plan a vacation around that. Like, hey, that week of earnings, I'm taking it off. I'm getting the heck out of here. I'm ignoring my screens because you know what? Historically, it's just not worked for me. There's no sense in putting myself at risk when I know historically it's not going to work out.
No, yeah, it's learning when to not trade is such a key edge. The best way to avoid a punch is not to be in the ring, as John likes to say. But I mean, it's hard to do that. I mean, you really have to, kind of get beat up a little bit before you learn to learn quickly. But yeah, when you don't have an edge, go do something else. Go exercise the freedom you have as a trader to go relax, do something more productive than play the what if game, because that's a bad game to play.
Absolutely. I say a lot of times, sometimes your biggest opportunity in trading is to do nothing at all. Recognizing those days. Hey, I don't see it right now. I'm stepping away. I got stuff on my mind. I got distractions. My opportunity today is not to do this. Let's go focus on something else.
Yep. No trade is a trade, and very often the best trade.
I wouldn't argue that one. Not at all. All right. I got two last questions for you here. Greg, what are some of your long-term goals in trading? Like, let's get wild here. What really do you hope to get out of trading at some point in your life?
Trading 20 ES. No, just financial independence, just trying to be control over my time, run a business, be an entrepreneur in a way, be free with my time, be able to do whatever I want, whenever I want. That's the long-term goal.
I asked this question, I think every person I talk to, and I'm waiting for someone to get on my level of being like, I want private jets. I want mansions and mega yachts. Like that. I'm waiting for someone to say it, and everyone, I want that finally. And I get it. I totally understand where you're coming from, but I'm like, at some point, someone's got to have that same thought as me. Like, I want my garage full of brand new snowmobiles every year. Like, yeah, I want some of the materialistic things that trading can bring.
Hey, you might make more money than I do as a trader just because you have the higher goals. Then I'll settle.
I can appreciate that though. No, financial freedom really is the key here. That should be everyone's ultimate goal.
Once you have really the only thing.
Everything else comes with it.
Yeah, anything else would be extra. Because you need something as a developing trader to keep you through the process. Like, it's not easy to be a trader. It's honestly, if somebody asked me, I want to be a trader, what should I do? I'd be like, are you sure? It's not easy. And that goal, it's like a lighthouse, a beacon of hope. It's like, if you keep going through this, like, you'll suffer today, but in the long run, hopefully you'll achieve this control of your time, which is a luxury most people will never have. And it's invaluable because we don't get more time. We do not get more time. And that's really biggest driver in why I do this. Other reasons as well, but that's number one.
Awesome. I can appreciate the perspective there. Last question for you. How's your experience with Topstep been?
Phenomenal. Yeah, I've got nothing bad to say about Topstep. Everything's great. I know we were talking earlier, but just to reiterate what I said there, Topstep provides the cheapest futures education you could get. The experience of learning how to trade futures. If you want to do it with your own cash, you could lose it very quickly, if not instantly. If you don't know what you're doing, or you would just need to have a lot of cash to be able to manage it. If you wanted to trade ES, you could open up an account for $4,000, but if you don't know how to manage risk and profit, you're going to lose that in a couple weeks, if not the same day. I know I would have lost it all on the same day, my first day trading futures with Topstep. So it's the Topstep listens to their traders. They create, they listen to feedback. They create options for the traders to succeed. They have their traders in their interest. It's a phenomenal program.
Awesome. Well, I appreciate you saying that. And Greg, I thank you for sitting down with me today. I think everyone listening to this will definitely appreciate it as well. So we wish you the best of luck and look forward to continue seeing your name up there on the boards and trading well.
No, thanks so much, Dan. I appreciate this. This was fun.
Awesome. Thank you.